Hi, I'm Phương Anh at Dragon Capital. I'd like to share how the Vietnam market is looking as we headed into the new year and why that matters. The overall setup for Vietnam equities remains supportive as we enter 2026. Vietnam is delivering growth that remains exceptional by global standards, and importantly, it is broad-based rather than driven by leverage or a single sector. A supportive backdrop does not remove risk, but it does clarify what matters most, which brings us to the key watch points. The first watch point is foreign exchange and inflation, which together define the room for policy support. FX matters because it affects offshore returns and sets boundaries for how accommodative policy can remain. So far, inflation has stayed contained, allowing the state bank to support growth without undermining currency stability. The second watch point is reform delivery. What matters for markets is how stated intentions translate into delivery. Over the next few months, proof points include progress on administrative simplification, credit flowing to productive sectors, and infrastructure moving from approval to execution. These are the indicators we will continue to track. Equity markets responded positively into year-end, with the VN Index rising near 6% in December. That move was led primarily by domestic liquidity, reflecting policy conditions and local participation, rather than a broad re-rating across the market. Foreign flows turned positive, added an incremental tailwind, and equity outcomes remain closely linked to policy settings as well as underlying growth. Taken together, Vietnam enters the new year with exceptional growth, supportive policy conditions, and clear guardrails. How policy translates into liquidity, earnings, and execution will determine outcomes from here. For more detail, read the full monthly report link below, or please get in touch if you'd like to discuss further.